My next guest is a regular. You know him. He's also a friend of mine in full disclosure. But I have him on not because he's a friend, because he's smart. Back in May of 2015, we have an interview. He sends me a chart. He says, here's my analysis of the chart. We're topping right here. We're topping in May on the Dow in May of 2015 at about 18.3 and change. I don't know, something like that. Well, here we are in early 2016, Feb 2016, and we're down, 2,100 points from the top. Pretty good call. I'm talking about Gregory Mannarino of TradersChoice.net. Gregory Mannarino, thank you for joining us today from Las Vegas, Nevada.
It's great to be here, Greg. Thanks for having me on again. I appreciate it.
I want to get to your next call, your next chart, and I'm going to hold it up, and I want you to talk about it. And boy, I'm not even a chart guy, and you know I'm not a trader, but I can tell bad news when I see it laid out like this. Here is your chart, and I'm going full screen with it right now. But you can still talk. Here's your chart. So here is your 2000, 2008, and here's where we are now. And then there's your call, and then the market's down from there. And then you're saying that the market could come down to here, and that's what it's saying to me. And folks, please get a good look at this. And I want Mannarino to talk about this. Let me get the autofocus. That's between 5,000 and 6,000 on the Dow. Is that right?
That is correct, Greg. It could go lower than that. As a matter of fact, in my free ebook, which I'm proud to say almost 120,000 copies have been downloaded already. It's completely free. There's no catches here. Anyone can get this right on my website, TradersChoice.net. I outline a scenario where we would hit Dow 6,000. However, we may go lower than that. Based on what is occurring here with regard to fundamentals and technicals, and a lot of other things that are occurring in this market here. But this is what people need to be ready for, is a major, extreme sell-off with regard to equities, which are inflated in a bubble. If you look at that chart again, you get that .com bubble. You can see what that looks like. You got the 2008 crash credit bubble event. And then the next bubble, which is the biggest of them all, being hyperinflated by a runaway central bank who has no alternative but to continue to inflate. And that bubble is, I believe it's bursting now. And that's where we are, 2,100 plus points off the top of the Dow since last May. There's nothing to push this back up now. I want people to keep this in mind. I do believe we are in that downward phase at this time. That does not mean that we are not going to get a bounce here or there. I mean, look at the previous ones. There's always a nudge up, then a severe drop. It goes back up. But the trajectory here, Greg, from where we are now is lower. I also want people to pay attention to the metals market so we understand that they're not real. There's no price discovery mechanism whatsoever in any aspect of this market. There's no doubt about it. But I had come out recently saying this year, Greg, 2016, in my opinion, at this time is the year for precious metals. And I do outline this again in my free 197-page ebook, which I hope if every single one of your listeners downloads a copy. There's no catch. It's 100% free. All my work is free. You know that. And I want people to take advantage of it because I believe we are going to enter a scenario which I call an X-wave. It's an X-wave theory that I came up with. I outlined again in my brief there, where we are going to see the stock market drop, the Dow continue downward, and then we're going to get a crossover with an upward trajectory of precious metals. And this also will be extreme. Why? All of this, Greg, as you know, has to correct the fair market value. There's no doubt about it. We have nothing but a twisted, distorted market that is so out of touch with reality. It's frankly mind-blowing here. We also know, we keep hearing about this, we are in a global slowdown, period, the end. That's going to affect a lot of things. There's pressure on the U.S. dollar. Why is that? Because the U.S. economy is slowing as well. So despite President Obama peddling his fiction that we are not slowing, we are slowing here in the United States. That's going to affect asset classes across the board, no matter what they try to do, to keep them distorted, because that's all they're doing now. It will correct to fair market value, period. There's no maybes. There's no ifs. This is going to happen, and we're seeing it now.
Just to back you up on that, I mean, this is a CNBC story, so even CNBC is getting hit square in the face with the frying pan of reality. And here a Citi analyst is coming on to back you up. Global slowdown, right? World economy trapped in, quote, death spiral. Trapped in a death spiral. I mean, you look at the Baltic Dry Index, which was at 12,000. I think in my weekly news wrap-up, I made a mistake, said it was 1,200. 12,000, and it's down to actually a dip below, another all-time high, dipped below 300 to 298. From 12,000 to 298. What is that, a 99% drop in the Baltic Dry? It's stunning. It's stupefying.
So how can world markets, including the United States, justify their multiples? They can't do it. It has to correct. You understand all of this? So, again, we're in that phase where it is correcting to a fair market value. And people, I don't believe, have any inkling that world central banks, again, and this is something you and I have covered at length many times, have fired salvo after salvo after salvo at their economies, especially hitting, none more so, as a matter of fact, than the United States Federal Reserve, who keeps saying, hey, you know what, if we keep stimulating, if we keep pretending, this was a pretend rate hike. It never happened, Greg. The market's not buying it. Look at the U.S. 10-year. Today it's 1.86, 1.87. It dropped below that recently. Forget about it. I don't care what the Fed is saying. They're not doing anything. So, again, despite all of this action here, they're kind of expecting some kind of a miraculous event to occur where all of a sudden the economy of the United States and the world is just going to turn around. It's not going to happen. It's not going to happen here. So again, that just plays right into what I'm saying, and the people at Citi are saying is all of this will correct the fair market value beyond any shadow of any doubt. So people need to understand what they need to do at this particular time. You and I, and many of the guys have been warning women too, that this event was inevitable, is going to happen. World central banks have gotten so desperate. Look at the Bank of Japan recently. They went negative. It's a historic thing. Despite the fact that the Bank of Japan was saying they were never going to go negative interest rates, well, they have now. They're following a lot of other central banks in the same thing. That the United States Federal Reserve, again, is going to be forced, in my opinion, to do something. And they're going to call it who knows what. But they're not done stimulating, Greg. They're not done stimulating. They're not done printing. They're not done doing some other kind of backdoor thing to attempt to keep this propped up, Greg. Again, why? This is an election year. And it's not going to work. I don't care what they do. The one thing that we all know, Greg, is very simple. And I challenge every single person to do a little bit of research as to what I'm about to say. If you look at every single financial and economic bubble in history, they have one thing in common, and that is that they all burst. They all burst despite extraordinary means to keep them up. They burst because they rise above a level that can be sustained, here's the key, by any underscored means. Any, Greg. So the Federal Reserve, in collusion with our policymakers and everything else, can live in their financial and economic fantasy land. It's not going to work. All of this is going to correct, and I'm telling you, and I hope people are listening. It's going to make the 2008 event look like child's play. Look at that chart you had again. We are going to drop lower than before. The Federal Reserve is out of ammo. What are they going to do here? Well, they can go negative. What is that going to do? Well, maybe it might put a temporary bottom under this market at one point. But again, it's going to hurt the people. And there's no doubt about it. The economy of the world is slowing. The U.S. economy is slowing down. And you can look at metric after metric. Greg, you had mentioned the Baltic Dry Index. Absolutely. What about GDP numbers, which just missed the mark here in the United States here? The Institute for Supply and Management, non-manufacturing numbers, also missed the mark. You could just go on and on and on. The labor force participation rate. I don't know what kind of proof people need to say, hey, you know what? Obama's peddling fiction. We are slowing down, and people are going to get hurt here, and I mean hurt badly, way worse than the last one. And this event will not bounce back like it did last time. There's nothing to prop it back up again. Why? The Federal Reserve has run out of ammunition, in my opinion.
Negative interest rates, Bloomberg story, and I want to just make sure that people don't think this is some crazy deal that we're just anticipating. I mean, here I brought up my weekly news wrap up, and I wanted to ask you about this. They're floating a trial balloon, and we have negative interest rates, as you brought up, in Japan. They already have them in Germany. Actually, and actually in Europe. Actually, we've had negative interest rates relative to inflation for a while. But they're floating a story. The Fed wants to see how U.S. banks will do with negative interest rates. They're signaling they're going to go negative, are they not?
Absolutely. Ben Bernanke last week or the week before that also said the same things. He expects that's going to be in the toolbox of the Federal Reserve. They're going to have no alternative but to do something here at one point to keep it propped up.
Which means you put $100 in, and they're going to give you back immediately $99 or $98. That's what that means.
Yeah, exactly.
And also, too, the other thing I wanted to get your analysis on, too, is that, so what is going to happen as a trader? What is going to happen when the Federal Reserve says, yeah, we're taking away that quarter point. Not only are we doing that, but we're going to take away another quarter point, and we're going negative. And after they told all this big story about how the economy's doing better, we need to start raising rates and blah, 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 what is going to happen to commodities, oil, precious metals, everything, when they come out and say, they won't say they made a mistake, when they come out and say, yeah, we're going to cut that quarter point, and we're going to cut another one, or what's going to happen when they say no rate rises, we're going to cut it back?
Well, I do think commodities are going to go to the moon at one particular time, and I think we're starting to see it now. Precious metals are starting to gain traction in this environment where we are now. The U.S. dollar is also losing steam here. I want people to pay attention to this. We're not getting the market has been getting hammered since the beginning of the year. And we're not seeing the safety play into the dollar. We are seeing the safety play into debt here. Look at the 10-year again. Look at the bond yields. They're screaming. Bond yields are screaming at us, Greg. And I always tell people to watch the bond market. The bond market is warning every single one of us that something very ugly is right around the corner here. This is why we're seeing all of this flow of cash into bonds at this time. It's, again, considered the safety play. But let me just say this about the debt. The debt is worthless. It can never be paid back. We know that. So at one particular time, even the bond market is going to price the fair market value. So you can only imagine what that's going to mean.
That means interest rates will go to some normal rate, like 5 or 6 or 7. It's a normal rate, 5-6%.
I mean, because it's worthless. The debt can never be paid back. I'm not making this stuff up. We all know this. We've been hearing about it for decades. It's just a situation of extreme danger, Greg, across every single asset class. Now, I'm not just talking about equities. I'm not talking about the debt market. We're talking about how every single thing, including housing, is going to correct to a fair market value.
You were talking about the politics of this, and this is where I want your trading expertise to intersect politics. And you told me something really important in the pre-interview, and you said you were watching the returns, and of course, like a trader, you're always watching the futures of the stock market, and you're watching the returns, and something incredible happened. Explain what happened when Bernie Sanders and the results between Bernie Sanders and Hillary Clinton came in.
Well, I'm sitting here with my iPhone watching the futures during the caucus, the Iowa caucus, and as it was evident that Bernie Sanders was doing very, very well, the futures were going lower and lower and lower. And what does that say here? Again, it's sending a signal to the market that, hey, you know what? There's a possibility that we may get a socialist here.
Who wants to fix the banks and rein them in.
Exactly. You know, it's not just that. Look, socialism doesn't work. I can't imagine why well, you know what it is? Here's the situation, Greg, and I'm gonna hate to say this, but it's the truth. The American people, more than any other country on earth, have been dumbed down more so than any other people on earth. And this is why you have a situation where people are looking to someone like Bernie Sanders to save the day. It's not going to do a thing. There's no saving any. I don't care who is in the White House. It doesn't matter. This whole thing, Greg, has hit a critical mass. There is no stopping the cascade of events which are going to follow. And all of this, I don't care if it's Trump or a combination of people, it's not going to matter. We are done. This entire situation is going to correct to fair market value. And I want people to understand what that means. It's going to be epic. Absolutely epic, Greg. And again, let me just stress this one more time real quick here. People sit back and they say, you know, this is a financial issue. It's not. This is a resource problem. That's what people need to understand. But we cannot borrow or steal cash from the future to sustain the now. That the bubble that has been created in human population will also burst along with the debt bubble. That's a fact. The debt bubble has created a human bubble, a human population bubble, Greg, and they're going to correct simultaneously, and we are going to see a biblical event occur. No doubt about it.
I want to come back to the Bernie Sanders. You said something else. I want to get this in there because I thought, oh, yeah, right. You said, so why do you think the future spiked downward? I mean, you said to me, said, I'm watching it, it's 140, and it goes down to, it's 40, and it goes down to 140, boom, just like that. What does that mean Wall Street thinks about who won that race?
Oh, they think Bernie Sanders won, without any doubt. Without any doubt.
They think Sanders was a winner in Iowa, in effect. That's what the future, in your interpretation, means.
Yes. That's exactly what I think that Wall Street believed happened at that particular time. Absolutely. And that's why the market took that dump. The next day, the market fell 297 points, 292. And again, look, we continue down here. The market is stuck in a bad spot right now. And again, but it's going to drop much more. Look at that chart again, where we have the potential to go.
And you say lower, possibly.
It could possibly be lower. Again, I outline a scenario in my free ebook where we'll go to Dow 6,000, but I also outline a scenario we can go to Dow 4,000. I think right now.
And you think we get there in a hurry, not in a matter of several years, but maybe in a matter of months.
In a matter of months, maybe by the end of this year. It's really difficult to say, Greg, because, again, this plays into something else.
But it's a lock. It's coming. There's no getting out of it.
Oh, there's no doubt. Well, again, what's going to push this market back up? Is the global economy all of a sudden going to just turn around? Are we going to turn around here in the United States? Look, this is a global thing. If President Obama wants to peddle this fiction, again, that the United States is an island, that we're isolated from the rest of the world, well, the man is deluded, okay? It's a global economy. We're in a global slowdown, and we keep getting warning from the IMF, warning from the Federal Reserve itself. It is saying that the United States economy is slowing down. William Dudley said it just last week. I mean, come on. What do people need to see to believe that it's true? Look in front of our eyes. Again, focus on the bond market. Don't look at the stock market, people. It's the bond market. The bond market is sending red flags enough to cover the sky at this particular time. And it's a very big warning to me that something very bad is not too far off.
I want to close with this, and that you made your big call, and I had a couple of neighbors who are invested in the stock market. I live on a dead-end street, a long dead-end street. And I was out working out at the gym. This has been May, so I go drive down the street, and they're friends of mine. They're nice people. And I said, hey, look at this chart, man. My guest, Gregory Mannarino, you can get traderschoice.net. He's a stock expert, former trader at Bear Stearns. And I said, he's calling the market top right here, right now. He's coming with some analysis and a chart. And it'll okay. Then I talked to him after this little run-up in, I don't know, October, November, whatever. And they're like, I made lots of money on it. It came back almost all the way. It didn't really come back all the way, but it came back, and finally, my neighbor pulls up in front of my house. Hey, how you doing? Let's call him Bob. Hey, how you doing, Bob? And he said, fine. And he basically, he admitted, yeah, you guy called the top. I said, oh, yeah, a couple thousand points ago. Yeah, he sure did. I think it's pretty safe to say he called the top. And he says, well, it's only down 8% or so, and maybe that'll be all it happens. And I said, well, my contact, Mannarino, says no. David Stockman says no. Charles Nenner says no. And I don't take my word for it. It's going to go down much lower. Are people deluding themselves that this is just a little correction and they should buy the dips? I mean, is that the mentality that if it's been good so long that the government won't let it go down? Is that what you're saying? And here's the chart again. This is your most recent chart that you came up with. That you take a look at this trend line. Here's that low from 2000. Here's the low from 2008. And you're estimating the low could be somewhere, just this trend line could be somewhere down in the, let me get it over there, in the, let me get it close, autofocus, do it, 5 to 6,000 on the Dow range. I mean, that is a wipeout.
Or lower, Greg, or lower. I think, without a doubt, we could see Dow 4,000. What I want people to take away from this is they should be selling any rallies if they're invested in this market. I do believe there is a potential here, and we'll see how this plays out over the next week or two, that the market will attempt a several hundred point rally regarding to the Dow higher. But I will be selling into that. There's no doubt about it. I think after that, the market may plunge, and it could be severe. So I believe that, again, all the stuff I'm talking about here, what people need to understand as a trader, you're a speculator. And everything you speak about is based on incomplete information. You can never get a complete picture. You look at several aspects, many aspects of the market, you try to put this together and try to come up with the most reasonable scenario. That's how it works here as a trader. So what I believe, again, we could see is a run-up in this market, which I think will be very short-lived. We are not going to come close to the top back in maybe a couple hundred points, 500, 600, I don't know. And then I think it's going to roll. So what people need to have of the mentality, instead of buying the dips, they need to be selling the rallies at this particular time, Greg.
Gregory Mannarino, traderschoice.net, and we will link to traderschoice.net. They can go down and scroll down and find your free ebook. And honest, folks, I wouldn't say this. There's no catch. It's free. The stock picks that Gregory Mannarino puts out are free. So Gregory Mannarino, traderschoice.net. Thank you so much for coming on and taking us to school on the markets and what the markets are saying about the politics going on. Thank you, Gregory Mannarino, traderschoice.net.
Great to be here, Greg. Thank you.